Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, January 30th, 2009. Well, we're seeing continued weakness in the markets today, folks, although it's just a minor down day at this point. The Dow down about 51 points, the Nasdaq down about 6, and the S&P down about 5. Now, I drew in a lot of these trend lines that you're looking at now. I'll show you briefly where they came from. Most of them stretch back too far to really draw them in with you guys, but I'll just scan back and you can see. I'm just going to show you how far they go back and why they're so key, okay? Scanning all the way back. A lot of them come right from this 26th high. This one scanning right to the low, the high on the next day, the 27th. This one down here from the low of the day candle to this low and right across. So a lot of them are coming back from the 26th, 27th. Now let's scan all the way back here to the present time and give you guys a little synopsis. So again, the markets are slightly weaker, but you can see we've come off the lows very closely. And note here exactly the lows and the highs again getting hammered in by our trend lines that we had drawn in multiple days ago and just have it continue to extend. Notice right here the gap down, folks. See that we had a little bit of a lower or right around flat open today. Notice right here how this trend line that scanned all the way back far, many days, which was again coordinated with the lows put in yesterday here, also came into play today as you had a gap down or a little bit of a lower move early and you tried to rally and go positive. Alright, you can see the little wicks developing here, but what that's telling you is when there's wicks there, it's telling you the market has sellers right up here and is not able to close above. As soon as you guys know this by now, as soon as you can't close above a key trend line like this and the market continues to sell, that means more selling is coming, and sure enough, look at the fall. All the way down here, getting a minor bounce back to this resistance level once you pierced it. That's exactly where you started to sell again, and we went exactly to the low here on the trend line, and that was the low. And again, those of you that follow these trend lines closely can use that as a buying opportunity. And again, you should be able to, make lots of money. You guys know how to use these trend lines. You will be able to make a fortune. Okay, notice the bounce here. Now the bounce is very unique here, and it kind of came all the way up and actually went a little higher than this trend line. Now, a lot of you guys know how you have to confirm a move. This trend line, which was resistance here, came into play again here. Now, many amateurs would say, well, we pierced it, we closed above, this market must be going higher to these levels up here. I would say no, because you didn't confirm it. Look at this. You have to close higher than the previous candle, or at least trade well above it to confirm a move above a key resistance line. Sure enough, we did not do that. You're selling now, and sure enough, we're back below the trend line intraday as we do this video live. Now, the other thing of interest here is, how do we know that this level up here was in a resistance level as well? How do we know it was necessarily going there? Well, just flip to your 60-minute. Look at that. Here's your 50 moving average in white, and look exactly where this candle went to, guys. So you combine these time frames, you will become a 10 times better trader and much more profitable. All right? By knowing this 50 moving average was here, as a shorter, what you want to do is be patient as it pushes through. Wait for it to tag that 50 moving average on the 60-minute chart or the hour chart, and then take your short there. Sure enough, what happens? Look at that nice little fall coming back. So it's very key, as I've stressed every day, that you coordinate all time frames that you trade off of, okay? You coordinate them, you'll be a far better trader. Now, the question is, what kind of flag is this? Believe it or not, this could be a little bit of a bearish flag off this move down, so we need to be very cautious about this move here. And again, we'll continue to watch it. However, if you trade sideways off of this move up and kind of don't break down below this 20 moving average, you could be setting up for another move up later in the day today. So watch this 20 moving average on the intraday 10-minute for more indications of where this market's headed. Now, if you're going to break up a little more, what you want to watch for here, folks, is the 50 moving average and the 200 moving average. Now, the 200's in green here. You can see it stretching across my screen. And the 50 moving average is sloping down. Now, this 50 moving average is going to coordinate right here with the 200 very soon. So on any breakup, that's going to be a ton of resistance right there when those two meet and form a necktie. So be aware of that as well, folks. And you want to watch that very closely in case we do start to break up off this pullback. Alright, now I want to focus on the 60-minute. Look at these key trend lines here, folks. Connect this high to these highs over here. What do you get? You get the close yesterday right on it, as well as the breakdown area on the 60-minute. Alright? And secondly, this high to this high to this high is our main breakout line from back here, and this is how we knew we were going to get a pop in the markets. last Monday, Tuesday, and so forth, okay? And that's exactly why we knew we were going to get it, because look at this. When you close back above it, right here, very bullish when you get above this breakout line, all right? Now, also note how it comes into play now. Stretch this line all the way down. Where was the low of the day today? Right there. How amazing is that? So this key breakout lane, when we were broke above it, was a bullish signal. When we pulled back as a support line, a major, major support line, and look at how key it played into right now. In addition, take the lows of this closing candle right here and the opening of this 60-minute candle, do a straight line right across. They coordinate in the middle right there, which was the low of the day. And that's exactly how you knew that the market would get a solid bounce. Whenever you have a key breakout line get retested on the downside, it's always major, major support. All right, guys. The other thing I want to point out here, you can see again the 50 moving average getting tested on the 60-minute. If we were to move up past that, you're going to come into resistance right here on the SPY at the high. Now, again, as we broke down to the downside here, notice how you fell all the way down and you went right through this support line. Now, on the upside, this line becomes resistance. Now, notice how also that line of resistance will act pretty much the same as the intraday coordination of these two trend lines as well. These two moving averages. So everything on the 20, the 10, the 60-minute, the 30-minute, whatever you guys trade off, should coordinate. And when you can put multiple things together and form a key level based on multiple charts on different time frames, 10 times better at making money. I'm telling you right now. One thing I also want to stress, guys, you should come join the research center at inthemoneystocks.com as we continue to do this on a daily basis. We'll show you all the key levels on the daily charts, hidden gem plays, stock picks, levels on crude oil, the dollar, gold, whatever you want is all given out in that, in videos, educational videos, multiple things in that. We also have the Pro Traders watch list, which has been amazing so far. Take care, guys. We will talk to you all tomorrow.